Today's close, Nifty 50, 26,175.75, minus 27.20, minus 0.10%, BankNifty, 59,681.35, minus 71.35, minus 0.12%, Sensex, 85,641.90, minus 64.77, minus 0.08%. If bulls defend Nifty 26,100 next 26,360. If 26,100 breaks 25,900 opens up. If bulls defend BankNifty 59,400 next 60,200. If 59,400 breaks 58,800 opens up. First 15-minute decision level, tomorrow morning Nifty 26,200, if market trades above 26,200 in the opening 15 bullish bias toward 26,360, if below 26,200 and selling accelerates downside toward 25,900. BankNifty first 15-minute decision zone, 59,600 to 59,900, above that keeps upside open to 60,100, decisively below 59,400 signals sellers have control. Today the market briefly sprinted to fresh intraday record highs. Nifty touched 26,325.80 and BankNifty and intraday 60,114.30, but failed to hold those peaks. That intraday rejection after a run to all-time highs tells us liquidity was tapped into the highs and short covering faded into profit-taking, leaving indices to close marginally lower. This is classic distribution at the top, early strength, liquidity sweep of highs, followed by absorption and then mild exhaustion. Global market overview: why it matters for India. Global cues were mixed to cautious on net. US indices showed resilience into November month-end with tech and large caps keeping pressure on volatility expectations. Europe traded mixed as political and fiscal headlines remained in focus. Gold and bond yields drifted slightly higher, while the dollar was modestly firmer, a combination that makes offshore liquidity a watchpoint for India. Why this matters for India: when global risk appetite cools, even slightly, fast-growing domestic indices that have just made new highs can experience profit-taking as global funds rebalance. US close snapshot: major US futures were mixed into the Asian Open, showing traders weighing a possible near-term Fed posture shift against strong economic prints. Europe, mixed session. Brexit-adjacent fiscal news and UK budget commentary created intraday noise. Asia. Asian markets saw early strength but faded after global risk cues turned cautious. Japan and ASEAN were range-bound. Net effect for India. Today's intraday rejection at fresh highs coupled with a firmer dollar suggests global liquidity tightened a notch, enough to cap follow-through buying. Keep an eye on US futures and global bond yields overnight. That will determine whether flows into India remain stable tomorrow morning. Indian market overview: Nifty plus BankNifty. Fundamentals: a strong GDP print, recent Q to Q3 prints and macro momentum, and better corporate sales data have been positive backdrops. They justified the earlier rally to new record levels. However, stronger macro prints also push rate cut expectations out, which can be two-edged. Good for earnings but weaker for high multiple, liquidity-sensitive names in the immediate window. Technically, both Nifty and BankNifty made new all-time intraday highs and then closed marginally lower, a distribution signature. On the daily chart, Momentum remains positive, higher highs intraday, but the daily candle today shows weak rejection from highs, a bearish divergence hint on short horizons. On the hourly, the structure shows an initial breakout, failure to sustain and a pivot into a narrow range. This typically leads to either a continuation, if buyers step in at the early morning decision zone, or a pullback to prior consolidation levels. What traders did today: aggressive buying into early breakout levels, followed by profit-taking as some big names failed to sustain intraday gains. Position managers trimmed at highs. Intraday momentum traders who chased the breakout likely gave back some gains near the close. That creates two reactions for tomorrow: defensive bulls waiting for confirmation at 26,200 by 26,100, or opportunistic shorts eyeing a failure to reclaim 26,300. Sector performance: why top plus weakest sectors behaved that way. Top sectors today: auto and IT showed strength, auto on strong sales data and IT on selective buying after positive brokerage calls. These were the sectors that helped limit the downside. Weakest sectors: pharma and parts of financials lagged. Pharma pulled back after profit booking in a few large cap names, and some financial stocks saw profit taking after earlier multi-week rallies. Real estate and select cyclicals also showed mixed flows after the intraday peak. Interpretation: rotation out of momentum plays into defensive cyclical pockets was visible. Buyers favored names with immediate earnings visibility, autos, select finance, and avoided high multiple, momentum names at the session's highs. Top gainers and losers: news technical reasons. Top gainers: representative auto OEMs and select IT exports names, driven by strong volumes reports and positive broker notes. Specific intraday leaders were TVS Motor, notable November sales beat, and a few tier I IT names. Top losers: representative select large pharma and a few financials where profit booking showed up. Tobacco names slipped on regulatory headlines. Why? Gains tied to fresh operational volume or brokerage data, losses tied to profit booking and sector rotation after highs. FII/DII activity: cash plus derivatives with impact explanation. Preliminary flow note: consolidated FII/DII settlement numbers for the day were still marked preliminary on exchange portals at the time of the official close. Flows update during the evening settlement window. Check the exchange FII, FPI and DII daily reports for final numbers. What's visible intraday? Familiar pattern. Foreign portfolio investors were marginally net sellers into intraday highs and then softened their net selling as the market closed. Preliminary. Domestic institutional activity showed selective buying in autos and financials. Preliminary. On the derivatives front, option pain max pain levels were concentrated around 26,000 to 26,400 for Nifty and 59,000 to 60,000 for BankNifty, which likely encouraged short covering during the intraday break of highs and then profit booking. Impact explanation: preliminary FII selling at highs contributed to the inability of indices to hold breakout levels. Domestic flows provided some support but were not large enough to sustain the breakout. Finalized flow numbers will confirm the scale, but the action is consistent with distribution into new highs. Technical analysis: daily plus hourly plus 15 min. Nifty, daily. Trend structure: medium-term uptrend remains intact, higher highs intraday, but today's long upper wick is a cautionary candle. Momentum: positive but divergence on short oscillators, RSI short-magged histogram fading. Key daily zones, support cluster 26,000 to 26,100, daily EMA previous consolidation. Resistance is 26,325 to 26,360, intraday highs plus recent breakout shelf. Nifty, hourly 15 minutes. Hourly shows range between 26,100 to 26,325, a clean hourly break and hold above 26,360 would confirm follow-through. 15 minutes structure, opening 15 zone 26,200 is pivot, reclaim and hold intraday momentum toward 26,360, fail quick retest of 26,000. BankNifty, daily. Trend structure, healthy uptrend with fresh intraday high near 60,114, close below intraday high indicates short-term distribution. Momentum, also positive but short-term waning. Key daily zones, support 59,200 to 59,400. Immediate resistance 60,100 to 60,200. BankNifty, hourly 15 minutes. Hourly range, 59,200 to 60,100. 15-minute opening band 59,600 to 59,900 is the first micro decision zone. A gap open and hold above 59,900 in the first 15 high probability of a retest of 60,100. Failure to hold 59,400 intra increases chance of a correction to 58,800. Trade structure observation, educational only when an index makes a fresh intraday high and fails to close near that high, long wick, that often signals either A. Liquidity takedown, stop liquidity providers hitting stops above the highs, or B. Short squeeze exhaustion with no follow-through. The correct reading depends on next session's open behavior around the decision zones noted above. Key levels, educational, not advisory. Nifty key levels, education. Immediate support, 26,100, confluence of previous consolidation zone and intraday low. Stronger support cluster, 26,000 to 25,900. If price moves here, expect larger bid area, use multi-time frame confirmation. Immediate resistance, 26,325 to 26,360. Intraday lifetime high shelf, reclaimed and held confirms bullish extension. BankNifty key levels, education. Immediate support, 59,400, daily pivot plus short-term buyers. First 15 minutes decision, 59,600 to 59,900. This micro zone decides momentum for morning. Immediate resistance, 60,100 to 60,200. Above that accelerates momentum to next fib confluence. Educational note, use the opening 15 decision zone as a structural filter. If the index trades decisively beyond that small window, the short-term order flow confirms direction. If it churns inside the zone, expect range trade and lower conviction breakouts. Market psychology: why traders behaved this way today. Early bullishness came from macro confidence, strong GDP and corporate beats. Participants rushed to position for a continuation of the cyclical recovery. The sweep to fresh highs followed by a failure to hold indicates liquidity harvesting. Larger participants likely tapped supply above the highs to let smaller participants chase, then reduced exposure into the close. The marginal close lower suggests cautious profit-taking rather than panic selling. Psychology is, take some risk off the table at multi-month highs. Important news and drivers: domestic plus global. Domestic drivers: strong GDP growth prints and several company sales updates, notably strong auto volumes, supported early gains. Also watch RBI commentary later in the week. Policy decision window: strong growth may reduce immediate rate cut probabilities, which can shift short-term flows. Global drivers: Fed posture and US data, global bond yields and dollar strength are the main external variables that could influence liquidity into India overnight. Any unexpected moves in US yields or a risk of US session would likely amplify intraday selling pressure here. Tomorrow's market outlook. Nifty outlook: educational scenarios. Bullish scenario: Nifty opens above 26,200 and holds first 15 minutes. Bulls keep control target 26,360 to 26,500 intraday. Reclaim and hold above 26,360 suggests extension toward prior. Bearish scenario: Nifty opens below 26,100 and sellers accelerate, then expect a drop toward 25,900 and then the 25,700 to 25,600 shelf if selling intensifies. BankNifty outlook: educational scenarios. Bullish scenario: BankNifty opens above 59,900 and sustains first 15 tests 60,100 to 60,360. Bearish scenario: BankNifty opens and trades decisively below 59,400 in the opening 15, retest 58,800 then 58,400 if selling continues. First 15-minute decision rule: tomorrow morning use the Nifty 26,200 and BankNifty 59,600 to 59,900 opening microzones. If both morning zones show follow-through buying, the trend remains structurally bullish. If either breaks and accelerates, prepare for short-term correction. Watchlist for tomorrow: 2 to 4 stocks, technical reasoning only. TVS Motor, momentum into record sales, structural breakout on daily volume. HDFC Bank, key player in BankNifty. Watch for relative strength at morning open versus index to signal sector leadership. Sun Pharma, today's weakness created a support test. Watch daily close around supporting EMA for potential trade setups. Tata Consultancy Services, TCS, or similar top IT name, watch for intraday strength to indicate risk on rotation into exports. Selection based on observed sector moves and intraday price action. This watchlist is technical reasoning only. Educational concept: liquidity sweep and rejection. When an index or stock briefly runs to a new high or low and then quickly reverses, this is often a liquidity sweep. Large participants push price to shake out stops and gather liquidity. After liquidity is gathered, the market can reverse. The key to trading these is identifying whether the sweep was followed by absorption, buyers step in and hold, or distribution, selling into the sweep. Use the opening 15 decision zone to read absorption versus distribution the next day. Summary: today's session showed a test of extremes. Fresh intraday lifetime highs followed by rejection and a marginally lower close. The structural medium-term trend remains bullish, but short-term caution is warranted. The opening 15 minutes tomorrow around Nifty 26,200 and BankNifty 59,600 to 59,900 will tell us whether buyers re-engage or sellers press. Finalize risk plans before market open, protect profits, and use the decision zones above to align entries.